me is Sandeep Bagla, who's the CEO at Trust Mutual Fund. Great to have you on the show, Sandeep. I just want to understand, we've been hitting fresh highs in the market, right? The Nifty has been hitting fresh highs. It's been quite a stellar up move. But here on, what is the key risk that, one should take note of, given the fact that, chances of an early Fed rate cut have diminished? You have China also taking steps to boost its economy. And, we've seen in the past that, any rebound in China markets have been quite, fast. So here on, do you think these are the two risks that one should keep in mind? Or do you think valuations could be the bigger risk going forward?
Good morning. Thank you for having me on the show. No, what you are pointing out is right. There are multiple risks on the horizon. There is a problem in the Red Sea. There is cost issues. There are talks of central banks cutting, but I don't know whether central banks have ever cut in the past when markets have been hitting at an all-time high. Because obviously equity markets are not building in any kind of recessionary or slowdown. So what we can expect from central banks is basically an adjustment where the interest rates come down a bit. So it will not be a cutting of a rate. It will not be the start of a rate cutting cycle. So one should not really expect too much from the central banks. I think valuations are the key risk. Today, the market is in extreme bullish mode where we are hitting new highs and the valuations have gone up. So the margin of error, the margin is very low. Market is obviously expecting already building in high growth rates. And if there is any disappointment on that, that could be a disappointment for the markets in the slightly short to medium term. But in the immediate short term, the momentum is strong. The global central banks have been printing money. I think the G4 central banks have the stock of money today is about $21 trillion, which is going to areas wherever the valuation seems to be cheap or growth seems to be high, and those asset classes are doing well. And because the India relative growth story is very good, and there is some kind of stability in the economy and the politics, we are getting good flows internally, and markets are going up. So it's more of a momentum-driven stock story, I would say, rather than an investment case one could make of at this point of time.
All right, a momentum-driven rally, and of course, the up, in the short term, the bias is towards the upside. But let's talk about specific sectors. Then we've seen a very strong rally play out on Wall Street. Fueled by Nvidia, right? AI has been the buzzword, in the last couple of years. But do you think Indian IT is poised to benefit from this AI wave?
No, of course, Indian IT will benefit. Indian IT has benefited from all the major tech innovations that have happened in the past 25 years, starting from the Y2K situation, the global majors. So Indian IT has been quite smart, and we have executed things quite well. It remains to be seen whether we can transform ourselves to, delivering products of quality which the Western world can deliver. You see, today we are sitting in India, and all the Indians are paying money to all the American companies without realizing it. We are paying money to Apple, Amazon, Google, Microsoft, Uber, and the like. So they have, delivered products which can take money from the Indian consumer. I don't think in India, IT companies have that kind of wherewithal that we can come out with a product that can take money out of the American wallets. So I think there's a long way to go, and I'm sure the Indian IT companies will do well in the long run. But there is some distance to cover till we reach that. But the broad point is, yes, if there are benefits that are accruing to the IT world, they will percolate down to the Indian IT companies as well.
All right, that's the view on the IT pack. But what about FMCG? Earnings have been nothing to write home about, and FIIs have been trimming stake in this pocket. Should one avoid this pocket completely, given the fact that rural demand is still patchy and a lot is riding on rural recovery, especially in terms of volume growth for these FMCG firms?
Well, the Indian consumer has been a tale of two cities. The cities are doing well. The rural economy is not picking up to that extent that the economy will do what it will do. It is the markets which have to sort of balance it out. The markets are more bullish than the economy in the hope that the recovery will happen in the future. So yeah, probably one could be underweight in sectors where the recovery is yet to come, and there are no signs of immediate recovery on the cards. Yes, so one could remain slightly underweight on FMCG.
Of course, underweight on FMCG. That seems to be the general consensus in the market as well. But I cannot not talk about the PSU stocks, right? We've seen a very, stellar run when it comes to the entire PSU universe. But, here on, do you think there are certain pockets where, there's still a lot of room for upside? Because, a lot of experts have been pointing out that there's a lot of froth building, in some of the PSU stocks. Would you say oil marketing companies are still worth a look, in terms of valuations? And what are your thoughts on the railways and defense pockets?
See, the market outlook is extremely bullish in terms of order inflows and the optimism around the order flows for PSU companies. The PSU companies have got re-rated. There were concerns on government intervention from the promoters and capital allocation and in terms of agility. I think those perceptions are getting cleared for making room for greater valuations and improved, valuation multiples. So that story can go on for some more time till we get proper evidence on the ground whether the re-rating has been worthwhile, has been backed by actual numbers. But there are improvements on the ground. And see, some of these sectors that you mentioned, railways and defense, these are long-term sectors. So one has to take a slightly longer to medium-term call. Today, since you have more money coming in short period of time into the Indian markets, the valuations are going up. And the only thing I can say is that if you're betting on these sectors, you should be prepared for the long haul. So one should not really think of it as a 100-meter sprint. One should think of it as a marathon. And PSUs, I think, will do well in the long run. For the short to medium run, it's anybody's call.
All right. And lastly, what are the themes that are looking interesting to you? Especially given the fact that it is an election year. Which are the themes that you would be betting on at the current juncture?
At the current juncture, we have not really started our equity funds as yet. We are likely to come out in April with our first flexi cap fund. And I think our at Trust Mutual Fund, our CIO, Mr. Mihir Vora, he has told me that you should better look out for my first portfolio to see where I am bullish. So I think we'll have to wait for some more time.
All right. I think I'll also touch base with Mr. Mihir Vora later in the week then. With that, thanks a lot for taking out time, Sandeep, and sharing your thoughts with us. Appreciate your joining in this morning.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.